Hey traders, this is Jeff from ZenTrader.ca with a market update. Yesterday is starting to look like it could be a pivotal day. When the Fed released their minutes, the dollar spiked, gold has dropped like a rock, and the markets sold off and didn't have a late day recovery that wiped out all the losses for the day. So it seems like the catalyst right now, well, not necessarily the catalyst, I should say, but potential catalyst that is starting this, or the Fed minutes, that could start to see a decent sized correction. I had mentioned a while back, for those of you who have watched these videos and follow my timing signal, I've altered it in a way in an attempt to not get whipsawed, and I've done that a couple months ago, so that's been in effect. The reason why I'm saying that is we would have gotten a sell signal today had I not made some changes, and I'm only saying this because that in itself is significant. Now that's not enough to go out and short right now, because we could essentially bounce. And if that does happen, then I would say the exception that I've made would have kept us out of getting whipsawed, if that made sense. So I'm saying this because they're starting to feel like the markets essentially are starting to roll over. I'm not getting any results on my momentum scans. I'm actually eliminating stocks faster than I'm adding them. So it seems like there's a shift. We have reached the lowest point in the RSI that we have since the last sell signal, since the whipsaw that did occur here, the 50-point whipsaw that we lost here. So there are some things that are starting to happen. On the Dow chart here, we broke above this trend line that I had drawn, and that lasted for all of about 2 hours, and then we sold off. Whereas nearly every other time that's happened, it's been a successful breakthrough. So that's different. I wanted to show you here, ever since this big volume sell-off day on the Dow Jones, we've had 4 distribution days and 1 accumulation day. That's a shift that is favoring the bears. We've had a break of this significant trend line, and the reason why it's significant is because it's been touched many times, and it's recovered every single one of those. And so now that we've broken and closed below that, the McClellan oscillator is starting to gain some steam. And I saw this coming. I basically did a video explaining how this much bearishness on the McClellan oscillator almost every single time leads to some sort of correction. So again, it just seems like the odds that we're going to start to enter a corrective phase are really adding up. On the TSX, I'm still short. I didn't cover. We basically sold off all the way down here to the neckline. In my opinion, this is probably what you would call the easy money. Now we kind of have to wait and see if this is going to rally back up. This could easily rally up, another 100 points and stall right around here at resistance, and then slowly roll over, and then maybe break through this trend line, rather neckline. I had another chart, I'm not sure where it was, where the neckline, I actually had drawn it a little bit differently, and we are actually below that neckline. It depends. If you go, I think it was, if I started here and drew it like there, hopefully you could follow along there. Technically we're below that neckline. It really depends on where you draw that neckline at, and that sometimes can be a problem with technical analysis. So but this is definitely a very bearish chart. I did add up here. I talked about adding, and basically gave you guys a pretty good opportunity to add or open up a position if you didn't join me in this trade. So hopefully some of you did, because that would have been profitable very soon. So with that said, things are looking very